Welcome back to the Dividend Diplomats YouTube channel, guys. You got your broskies here, Bert, the Hurt, and Lanny. We are jam-packed here with another video talking about an industry that may have not been performing so hot in the last 52 weeks. And these are three stocks that either myself or my wife are holding in our stock accounts. Bert holds, I know, at least one as well.
Just one? Yeah, we're just shooting one here. So this will be a lot of fun to check this video out.
Guys.
And if you haven't already, you know what you got to do. See that subscribe button down there? Do you see it? I know Lanny's searching. Yeah, he found it. It's right there, guys. Subscribe. Let's go. Come on, everybody. I had to censor myself there because what I really want to say is let's freaking go. Subscribe. Come on, let's get to financial freedom together with your dividend bros right here. Yeah.
Yeah. All right, guys, let's get after it today. We're talking about the real estate investment trust industry sector right now, part of the stock market. You know, when you look at the Dow Jones US Real Estate Index in and of itself, it's down 13% since this time last year, back in July of 2022. So while everything year over year is pretty much up right now, the real estate investment trust arena is still getting beaten down or still low. I know all the Realty Income shareholders out there have been gobbling up shares at around 60 or slightly below, trading above 60 right now. So I thought today would be a great time to finally look at three of the REITs that we own. You know, my wife and I own two other REITs that not many people talk about. And then obviously we will talk about Realty Income because we want to see if, hey, while everything else is surging upwards 5, 10, 15%, 20% year to dates right now in the dividend arena, is there some solid REITs to buy or add to the current position? And I'm always looking to add to my current positions instead of creating new ones.
That's right. So when we look at this, we have our stock screener, which has the three metrics, but we got to modify it a little bit because they're REITs. REITs don't use EPS as their metric. The industry standard is FFO, funds from operations. So luckily, all companies report it in the sector. So it's a very comparable across the board. So anywhere where we have earnings, EPS in our screener, we swap it out for FFO. So we're going to first look at the price per FFO ratio. Then we're going to look at the payout ratio, dividends divided by FFO. I heard the community answer that one for us. Then we're going to look at the dividend growth history. That one stays the same. We look at the 5-year average dividend growth rate and how many years these companies have increased the dividend. Lastly, that bonus metric, the dividend yield. So this will be fun, everybody. We're excited. We're always trying to find these stocks, especially right now because it's so freaking hard to find stocks to buy.
Yeah, let's dive in, guys. So we're going to talk about Realty Income, Broadstone Net Lease, BNL. We're going to talk about BRT Apartments Corp. Ticker symbol is BRT. O, BNL, BRT. Let's get into O, the Dividend Aristocrat REIT, the monthly dividend income payer, the glorious one that everybody almost holds either in their Roth account or in their taxable account. Why? Because they like that monthly dividend check that arrives in their mailbox each and every single month. Being a landlord without being a landlord is what Realty Income is all about. So, Bert, give us a few metrics here, hit them hard with what their current price is at, how they performed this year, and what the AFO and price to AFO looks like.
Absolutely not, Lanny. I'm not going to do that. I'm kidding, everybody. Let's start with that price. $61.47. AFFO, $4. Price to AFFO ratio, 15.37. So that is below the S&P 500. Let's see if we go through that. Let's take a look at the payout ratio. I'm going to keep ripping through these if that's cool, Lanny, and then you can keep going. Let's go payout ratio.
Yeah.
That
What's
annual
it looking like?
is $3.07. That gives us a payout ratio of 76%.
Nice.
So
Nice. So below 80%, obviously below the 90% typically, threshold that the REITs have to hold themselves to. So, hey, they have still room to grow their dividend, which they do almost on a quarterly basis, guys. It might not be by a lot. It might be by like a fraction of a cent. But overall, throughout the year, it is amazing what they can do with the yield that they have. But for what's that 5-year growth rate look like?
3.08%. They've increased it now for 26 years. That has brought their yield up. That last increase and the decrease. There it is. Yeah, it's at 5% now. It's at 4.99%. That's always the benchmark I use for Realty Income. You see Realty Income at 5%. That's when I start really looking to buy this REIT.
I tell you what, 5-year average yield's 4.36%. So they're up 63 basis points against that metric. which is looking promising. Why? Because they're down almost 4% this year. They are down 17% since last year. So that is Realty income, price to FFO at 15, payout ratio below 80%, yield at 5%. And guys, it could be a great time to add a dividend aristocrat at a 5% yield. But wait, there's more. We're going to get into Broadstone net lease. Ticker symbol is BNL. If you guys remember, this is another single owned operated entity type of REIT. I replaced my store capital shares with BNL. Why? Because you'll see in the metrics, brother. So, Bert, BNL, I mean, they are not as much talked about, a lot smaller than, Realty income, of course. They're trading at only $16.52. And, the AFO, reaffirmed guidance from management right now is about $1.41 for the year, which what's that price to AFO look like?
It is 11.72. So trading at much bigger discount to Realty income there. Let's see the dividend, $1.12. That gives you a payout ratio of 79.43%. So higher payout ratio than Realty income. Lower PE ratio, higher payout.
Yeah, a
Oh,
little bit,
tiny though, not a lot. You're right, not a lot. Tell us about that dividend history, Lanny.
Yeah, first, before we even do that, again, it's, keep in mind, BNL hasn't been around for more than almost 3 years. So they have a very young life being publicly traded, I think going back to maybe 2020. So they don't really have a dividend growth, history or streak right now. But I will say they did slightly nudge up their dividend from, I believe, if I go back 27.5 cents to 28 cents, technically they've had dividend growth because they started out at 25. They went to 25 and a half in 21. They went to 26 and a half in 22, also to 27, and then to 27 and a half by the end of 2022. And then they went to already 28 in 2023. Whew. So they might even increase their dividend maybe 2 times a year. So I'm actually anticipating possibly another dividend increase because they did do just that during the second quarter this year. So I'm looking forward to them possibly doing it again, in the fourth quarter this year, possibly in that November timeframe.
All right, you heard it here, Diplomaniacs first. They might have another dividend increase coming here for BNL. The good news is the yield. That's what's bringing you here. The yield is at 6.78%. So a nice, juicy dividend yield.
I tell you what, they're down 26% since last year, but they're actually up this year a couple percent. So keep that in mind. They've been beaten down, but they're kind of nudging a little bit up year to date, performing much better than Realty income from a year to date stock performance standpoint. But the yield, I don't think, is too high to be afraid. If it was like, not to say over a Verizon yield at like 7.5 to 8%, then it gets a little bit of, uneasy. But at 6.78%, high, yes. But based on an 80% REIT payout ratio,
yeah, you're good. All right. So let's summarize here. Price to FFO 11.72, payout 79%. Increasing dividend history, still new. Lanny's projecting a double increase this year as they continue to ramp that up since they're a newer REIT. Yield 6.78%, and they are up 2% this year, but down 26% in the last 52 weeks. Why don't you bring it home with the Burt REIT?
Yep, the BERT. Yep, no, not BERT, the dividend diplomat that you see on the screen right now, guys. It is BRT, Apartments Corp. Ticker symbol is BRT, another great one. And bro, I'm surprised you don't own this simplified REIT ticker symbol right now in your portfolio, guys.
I know I should just for that. I think I have a good video I need to do another. There's a position I need for a REIT that I need to replace. But that's a video maybe next week that we can film because that's a good one. This might be one of the options, but please proceed.
Yeah, of course. And guys, if you haven't, subscribe, like this video. So BRT though is in my wife's account. And if you guys remember, she historically had a few other apartment REITs in her stock portfolio that have continually gotten acquired. So we keep moving on to the next one. So this is so far the most current one that we currently have. It's trading at $19.08. They're down about 1% this year, down about 16% since last year. Now, management again affirmed their guidance during the last quarter earnings release that AFFO looks like $1.56, which produces a price to AFFO of 12.23. So lower than Realty income and slightly higher than BNL.
All right, let's look at that payout ratio. That $1 dividend gives you a payout ratio of 64%. So beautiful. And
Yeah,
luckily,
wow.
yeah, it's very low for the REIT sector. Now let's see how that's translated to dividend growth. Their 5-year dividend growth rate is 5.69%, and they've increased it for 5 years. So we do have a 5-year. You can't see me here, everyone. Yeah. All right, so now let's look at the yield too. With the solid growth rate in the 5-year history, let's see what the yield is. 5.24%. And how does that compare to their 5-year average yield, Lanny?
Strangely enough, the 5-year average yield based on Dividend Investors website is 5.75%. So they're actually yielding slightly below what that 5-year average yield is. They must have really, at one point had a surge in price, and maybe now they're finally coming back down. So
Yeah.
hey, there it is. I mean, BRT 12 on the price to AFFO ratio, 64% payout ratio for a REIT, fairly low. 5 years at over 5%, yielding almost 5.25 right now from a nice income standpoint.
All right, Lanny. So rank them. You own all three. Is it a
Mhm.
1, 2, 3, or are you just gonna? Would you take a shotgun approach and just buy them all?
I might have some money in my Roth IRA from years back that I could probably grab a share or two of Realty income. Maybe I should just do that. My wife, owns BRT. It might not be bad just to pick up 5 shares under $100. And I think I have a significantly large position in BNL. So, reading the next quarter, I'll actually, make a decision at that point because I'm curious if AFFO has changed for BNL. Only saying that because the yield is slightly higher. So I'm just curious if something has possibly changed that we don't know about.
Interesting. So, I mean, just for me, I don't want to add new positions, so that takes 2 of them out. But Realty Income, I think I put up a tweet that I just grabbed 2 shares. So I just wanted to buy a stock. I've liked them around 60 in this range. I'll continue building. I think I own 134 shares now, but I have no problem to continue buying and just keep adding to them. Everyone, let us know what you think about these 3 REITs. Are you buying them, or what REITs are you looking at? We know a lot of people are out there tweeting about the sector. So please let us know which other ones we should be considering down there in that comment section.
Guys, if you haven't subscribed to this channel, like this video, you're rocking with the diplomats as we continue to give you stock news, dividend stock analyses, and stocks that we are buying or have bought during our purchase videos. And guys, remember, if you haven't subscribed, you're either with us or you're against us. Jack, that was Bertha Hurt and Lanny from the Dividend Diplomats, over and out.